All right, Bulls and Bears back with another dose of economic reality. Thank you for coming back to the channel. It's been a couple days. But let's go ahead and get right into it, folks. We had the Dow Jones with its worst sell-off in over a year. Why? Because the talks that rate cuts may not happen if inflation doesn't slow down enough to justify the rate cuts. Before that, it was, oh, we're definitely going to have rate cuts. It looks like we're on path to have rate cuts, right? All this flip-flopping makes it very challenging to be an investor. But just take a step back and listen and think about this. Let me just bring this up here, by the way. Dow Jones' worst day in a year follows talks of no rate cuts. Just think about the point behind the stock market rally. It's more easy money, promises of easy money. And when the easy money talk changes, then you see a big sell off when we had the worst day in over a year in the Dow Jones. Now, at least we did hit 40,000 a couple times. I say that because I had predicted that we would hit 40,000. Actually, let me find I had the chart pulled up here. Now I can't find it, of course. Here it is right here. And I had talked about the Dow Jones hitting 40,000 for over a year now. And I would have to counter the people on this channel that would say, I've been predicting a stock market crash and all this talks of a market crash, which I never said. I said, in order for the market to crash, you'd have to have the whole system of money get altered or get adjusted somehow. And you'd have to stop the ability to create endless amounts of money out of thin air. And therefore, then you could stop the stock market rally. You could stop a lot of bubbles from getting bigger as well. The housing market, the cost of living bubble, just the cost of living in general would come down if you changed the way money is created. Of course, that's very unlikely to happen. In fact, things are going to get worse when it comes to the money creation. We've got a central bank digital currency. I've been talking about that again for years. There was a recent article that I got a few messages about asking me why I didn't talk about it. Well, that's because I've talked about it probably 20 to 30 times over the past few years. But now it's being announced, so I guess I should talk about it. Swift planning launch of new central bank digital currency platform, 12 to 24 months. New collaborative experiments explore more complex CBDC use cases. So now that it's being talked about by Reuters, FinTech Magazine, Payments.com, TheBanker.com, then people are finally realizing that it's coming. But we've been talking about it for years, folks, because they were talking about it within their own documents years ago. But yeah, now that it's on these news sites, that people are finally realizing that it's coming. Yeah, it's coming. It's been coming. Sometimes things take a while, right? When you hear me talk about things, I'm not just making these things up. I have sources for the information that I put out there. Sure, sometimes I'll give you my opinion. Um, but for the most part, all you have to do is look into the news that I'm putting out there. I try to show the articles. I bring up the articles on the screen as often as possible. And there's people out there that don't do that. Some of them just walk around and talk and tell you, nothing wrong with that either. Some of the walk and talk videos I think are pretty cool. In fact, I used to do that, but my schedule's really prevented me from being able to do that lately. Anyways, let's get into some more news here because we got a lot more to get caught up on here and some recent happenings. Retailers like Peloton and Saks keep paying vendors late, signaling possible financial distress. Remember, Peloton was the darling of the whole health crisis, work at home. Everybody's going to work out at home now because they work at home. They might as well get exercise bikes. And we saw Peloton explode like, 5, 6 times, even bigger financial moves. But also, this article points out other companies, other businesses, Express and Bath and Body Works, have routinely failed to pay their vendors on time, folks. So that's a sign that there's some serious distress happening with some of these retailers. Actually, Bath and Body Works, I'm surprised they're still in business. I remember going there for a gift one time, and they wanted like $8 for a lip gloss. I was gonna buy it as a gift, lip gloss, $8. Like, what kind of lip gloss do you get for $8? Like, does it make your lips look like the Kardashian? Like, what's going on here? So I don't really shop there too often, but Apparently, people still like to pay $8 for lip gloss. All right, folks, let's talk about this. This could potentially be some good news. Billionaire investor and New York Mets owner says AI could yield a 4-day work week for most workers. All right, now let's think about this. So, AI, from what we know about it, is going to eliminate the need for a lot of humans in human positions, jobs. But now it's going to be great because people can work 4 days a week because AI is going to do so much of their work for them. So, does this make sense to you? So, for one, how are people going to afford the current cost of living on a 4-day work week? In fact, people are having to work multiple jobs. We've got record numbers of people working more than one job, but yet AI is going to give us a 4-day work week. I think it's a bunch of nonsense. But a billionaire says it. People open their eyes and they open their ears and they say, "Wow, there must be something to it." Billionaire investor, New York Mets owner Steve Cohen says he believes AI makes a 4-day work week an eventuality. It's interesting. Maybe he sees the cost of living coming down because otherwise, how are people going to work less hours and only 4 days a week? Or maybe it'll be 4 days a week, 4 days a week, 12 hours a day. I mean, that would make more sense with the cost of living the way it is right now. All right, let's transition a little bit. Let's talk about the losses at the banks with commercial real estate, folks. This is enormous. Every day, I see different reports of office buildings, office towers getting foreclosed. Here's just a couple over the past 1 to 2 to 3 days. Connecticut office building heads into auction after second foreclosure. Too many vacancies. That's within 24 hours that came out. Developer of Brooklyn's tallest skyscraper defaults on $240 million loan. 93-story building faces foreclosure. That was 2 days ago. Point Ruston parcels, including waterfront market garage site, set for foreclosure sale. Gold Coast Apartments contested $50 million in foreclosure. Folks, it's just a ton of distressed real estate out there right now. But you wouldn't notice it with the way the banks are acting, with the way they're operating. Remember, back in 2008, we had some banks fail. We had Lehman Brothers fall. We had the subprime mortgage market blow up. Banks hold back on lending, and I mentioned this before, and those of you that lived through it, you know. And back then, it was very difficult to get a loan for kind of a long time, like 6 to 8 months. It was really, really tough to get a loan, and that was the peak of the home price correction, right? During those months when credit was very tight. Well, now we've got losses that way um, exceed the losses and the negative equity from then, from the 2008 financial crisis, but yet banks are not pulling back on the lending. Sure, it's a little more difficult to get a loan because the interest rates are high and people have so much debt, but you're not seeing any sort of credit restriction like you did back then. That's why you're not seeing markets correct. And why aren't we seeing banks pull back on credit and making it super difficult to get a loan? Well, that's because banks have been guaranteed life support, folks. This is all about the life support at the end of the day. If the banks can keep loaning out money, you may never see these bubbles correct. And this is the same thing that happened in hyperinflationary economies across the world. You had the dollar from whatever country, whatever currency they deal in, created at the click of a button, known as a fiat currency, which is a worldwide phenomenon. And that creates an endless purchasing power situation where no matter how high prices get, people can always borrow money because the banks always can just conjure up this money out of nothing, right? So this is dangerous, folks. That's why we always have to come back to sound money. But we're headed in the opposite direction. We're headed towards the digital currency, which is going to be just the opposite of what we need. We need sound money, and now they're going to have this digital currency with complete control, tracking, traceability powers. It's going to be a nightmare, folks. So I think we should all be ready for this. Not to sound negative, doom and gloomish, any of this, but this is just reality. I mean, I showed you the articles earlier. Reuters, others are now talking about it, but we've been talking about here for years. And if you just stick around, you'll likely see probably everything we talk about come true. And ultimately, we will go back to sound money. Now, that's even further down the road. But ultimately, we've got to go back to sound money if we ever want to see any sensibility come back to the markets, the cost of living. and it's got to get there eventually. And people and investors are, I think, aware of that. Look at gold, 2,300. We've got silver now, 26.81, so knocking on $27 door. Yes, they'll likely knock the price back down on the paper markets, but what do you do to fight back against this? You keep on accumulating the physical. And my favorite is silver because it's the most undervalued. Remember back in the 80s, silver hit $50. Now we're just over half of the all-time high of silver. What can you buy today that's around half price of what it was back in the 80s, right? Not much. That tells you that there's a lot of manipulation going on, and that's going to be a huge, huge financial win for, I think, a lot of us that are accumulating silver. Also, oil. Oil over $86. It hit 87. It's down to 86.90 as I'm reading this. And remember when oil was dropping, the talking point was, well, they're the demand is lower, the demand is a lot less. So why is oil going up now? Is demand increasing? But the reason behind this supposedly is the OPEC cuts. They're going to produce less oil. But supposedly the oil being a higher price is a market negative. And the theory behind that is that people will have less money to spend at retailers and spend elsewhere because they're going to be spending so much putting gas in their vehicle. Well, if high prices make people spend less, then why are we still seeing the economy continue to grow right now? But reality, folks, it's just fake growth. It's people spending money they don't have. It's borrowed money because it could be created out of nothing. And until that ends, folks, you're going to have to face this high cost of living, and you might see some of these markets not come down very much at all. Look at the housing market. Home prices went back up just recently when you look at the year over year numbers. And again, something people said would crash. And I've been probably the lonely voice in the woods saying, no, you're not going to see it crash because the banks are being propped up right now to no end. Until that stops, then you're not going to see these big market corrections like you've been expecting. Now, yes, there have been some pretty big corrections out there. Electric vehicles, but 30-40% price corrections in some models. But home prices, not so much. Will that be the straw that broke the camel's back for the U.S. consumer? Or will it just be endless programs to help the consumer? Therefore, we're not going to see any sort of consumer-driven economic decline, right? So normally when people are buried under this amount of debt, you would see some sort of pullback in spending and therefore impacts across the economy, job losses, etc. But now you're not seeing a pullback. In fact, even at all-time high debt levels, spending continues to accelerate, even though the banks are facing bigger losses today in commercial than they were in residential real estate back in the financial crisis, right? Pretty insane. You can't make this stuff up, but this is what's happening, folks. And until this system of money transforms, you're likely going to see things continue to get worse. And could something break any day? Absolutely. There could be a string of bank failures. Maybe the people that were supposed to keep the banks propped up hit the wrong button. Maybe there's a glitch, an outage, a black swan event, etc. So always be prepared for that. But otherwise, prepare for more cost of living nightmares, folks. Central bank digital currency coming. You let me know how this ends and how you're preparing for it. Please let me know down in the comments. And I hope to see you on the next video, everybody. Keep stacking. Peace.